everyone. Welcome back. My name is Nick Lamparelli. This is the Coverager Podcast. Today we're going to mix it up a little bit. We're going to step away from some of the common topics that we've been talking about and go in a little bit different angle, which is going to be always really interesting. I have Karl Wiley, who's the CEO of Allstate Protection Plans with me. Karl, welcome.
Thank you, Nick. Great to be here. Thanks for having me.
Karl, I start all of these podcasts by allowing you to give yourself a proper introduction and a little bit of an elevator pitch. Karl, who are you? What do you do? And why is that important?
Great. So as you said, I'm the CEO of Allstate Protection Plans. So you may ask, what is Allstate Protection Plans? Look, we were originally a company called SquareTrade. We were a venture-backed company that was founded really with a mission to disrupt the sort of, I would say, sleepy traditional extended warranty and device protection industry. It was an industry with a relatively poor reputation for customer service, pretty devoid of innovation. And we saw an opportunity to change all that with a very customer-centric, technology-forward approach that was a very different business model based around a branded product, right? So that product, SquareTrade, and that approach got some traction with some of the major retailers in the U.S., and we caught the attention of Allstate about 4 years ago, a little bit more than 4 years ago. Allstate was looking to expand its offerings beyond traditional home and auto to really protect a broad range of things that were important to people's lives, including their technology, which is obviously in today's day and age really, really important to people. And so they approached SquareTrade, and a marriage was consummated relatively quickly about 4 years ago. And since then, our businesses, the combination has been incredibly successful, and we've really pretty steadily taken over the device protection market here in North America. We rebranded our product from SquareTrade to Allstate Protection Plans, thus my current title. We now serve pretty much it's a who's who of the major retailers in the United States, everyone from the Home Depot, Walmart, Costco, Target, Sam's Club, Amazon, and so on, providing their device protection products in their stores and on their websites. And we've been steadily expanding abroad as well. So we're live in Canada. We have a big European market, and most recently Australia and Japan. And so we've now grown as part of Allstate to have almost 140 million global customers and policies in force. So we've really become one of the top 2 or 3 players in device protection in the world over the last 5 years.
Okay. Karl, we're going to get into a lot of the details around that. Specifically, I'm extremely fascinated with how that works. But I couldn't help but, as I was casually researching you and all of the things that you've done in the past, you didn't have an insurance background. You were more on the tech side. So I'm always fascinated with how that transition occurred. What did you see? Or was it as simple as like, hey, the customer service and the offering over there just really stinks. I think we can do a better job. How did you make that transition?
Yeah, it's a good question. It's one my wife asked me a couple times, I think, too, when we were going through it a few years ago. I think it comes down to 2 things. You're right. My background, since I graduated from business school in the late 90s, is really mostly consumer technology companies. And I was attracted to the tech industry a couple of decades ago because it was disruptive, right? I saw all of these companies doing incredibly cool things, finding ways to use technology to change traditional methods of doing things and make it better for consumers. And so that's always been my kind of bread and butter as an individual. And so when I was looking for my next adventure, when SquareTrade came across, the first thing that was obvious to me is that it was a disruptor, just like all the technology disruptive companies that I have been working with. And as I mentioned in my elevator pitch, it was really doing the same thing. It was, how do you take technology and innovation and take an industry that really was in need of disruption and turn it on its head? And I'd say when I was talking to SquareTrade, again, about 3.5 years ago, or almost 4 years ago now, we were partly on that path to success, right? We had landed some of our big customers, but it was clear that there was a ton of runway still to go, both domestically and globally. And so that was the first thing, is that this is another disruption opportunity that really felt like it was in my sweet spot, even though I didn't have that insurance background. But to that point, the second thing was, I actually don't, even though, yes, we are a warranty company and technically an insurance company and obviously owned by Allstate, I don't think of us as a warranty company. I actually think of us as a consumer technology company, because at its heart, we've built technology and we've innovated around process and service over the years to make customers' lives better. By building that technology, we create customer choice. We're able to deliver service that this industry has never seen before. As our heart, culturally, we're a tech company and we're a startup. And so for me, even though on paper it looked like a little bit of a leap, it really wasn't. And when it came right down to it.
Yeah. From a warranty standpoint, what kinds of products generally lend themselves very much to having warranty protection? What do you look for?
Yeah. Well, it's interesting because that definition is broadening actually every day. You could simplify it and kind of say originally it was almost anything with an on-off switch, right? anything electrical would be something we would cover. Obviously, the traditional products are well known. Your cell phone, right? Your laptop, your TV, any kind of consumer electronics device is kind of where we got our start and our sweet spot. But since then, we've now gone very big into major appliances, which obviously they're electronics now, and many of them are, smart devices, just like our phones are. But that requires a different set of capabilities to service and repair than it does to repair a phone or a laptop. So that was an expansion that we've gone big into now with the Home Depot and other clients. But interestingly, now we're turning our attention to things that don't have on-off switches, but still benefit from consumer protection. Things like furniture, for example. So we provide policies that cover accidental and mechanical failures on furniture. And there's actually a very large sort of incumbent furniture protection business that's out there that looks very much like the CE business did 10 years ago. It's at that kind of sleepy, not great customer satisfaction phase. And so we feel like a lot of what we can do that we've done in CE is directly transferable into that market. So that's been a recent growth focus for us. But we even cover things like optical, eyeglasses, jewelry. Almost anything that can be damaged or fail or break is a good opportunity for protection.
So how do you, as an insurance professional, of course, I'm always sensitive towards adverse selection and moral hazard. This seems like one of those areas, like at first glance, as a non-warranty person, I'm looking in like, that seems scary. Like, how do you know you're dealing with, I'll call it honest customers? Yeah. Like, how do you delineate between those two, to prevent consumers from filing claims that, are not fitting to what it is that you're trying to do as well? How do you work through those aspects?
So specifically, yeah, I think there's a couple of things. So first of all, fundamentally, the vast majority of the policies that we sell are sold at the time that the product is being sold, or very shortly thereafter. There's usually maybe a 30-day window where somebody can come back and purchase a product. So you start by saying, like, look, if you're starting coverage from day one, then you don't have the moral hazard problem of people, for example, buying coverage on a device that's already broken, right? Yeah. That would be one example. So part of it is just in the setup, right, of when you sell the policy, and then making sure that when you work with a partner, you're pooling your risk, right? Just like any other insurance business, right? So we're covering the broad swath of products that are there, not just the ones that are likely to break the most, right? And so in doing that, you can kind of manage that. So that's one piece, which is just sort of the structural part of the product and how we manage that. But the second is there are bad actors, as you said. Insurance fraud is a thing everywhere. This is actually one of the real benefits to us being part of Allstate, and one of the things that makes us different from other folks is that we have the benefit of Allstate's Center of Excellence on Fraud Detection, which is like, imagine hundreds of data scientists, technology experts, fraud experts, partnerships with third parties, internally built algorithms developed over the years to try to find and root out fraud in their core businesses. So we combine a lot of that with homegrown systems to identify fraud on the back end. So there's a lot of things that we can check once we know a little bit about who you are and various patterns, particularly on mobile phones where probably fraud is a bigger risk. If you're covering loss, for example, somebody can say, "Hey, I lost my phone," and we'll send them a new one. So yeah, I think the key is using technology again to be able to pattern recognize. You're either hitting people against databases of known fraudsters or looking for patterns that over time suggest that maybe there's something funny about this. That would then lead us to take additional steps to double check if that claim is legitimate. The challenge is you don't want to do that too much, right? So the old dolphins in the tuna net problem. For us, customer experience is paramount. Like we want the claim filing experience to be smooth, easy, and so we don't want to have to make people jump through a bunch of hoops when they honestly just lost their phone, even if they bought it 2 weeks ago, right? So it is the power of the technology, and again, being part of Allstate, that allows us to do a lot of that sight unseen to the customer behind the scenes, and only intervene in the cases where we really have a red flag that's been tripped that says, there's something kind of fishy about this, so we might need to talk to you, or we might need to have you answer, provide a picture of your driver's license or something like that. But if you don't have that technology, you're going to have to intervene a lot more because the fraudsters will find you, and they will take advantage of you. And the only way you can solve that is by kind of intervening in almost every situation, and then you get a bad customer experience.
Yeah. How does the insurance coverage work? Are there deductibles? How are claims settled? I'm thinking of older phones. Just the temptation of losing a phone that's older versus one that's newer. How do the coverages work?
So yeah, there's a variety of different things. I would say there's two fundamental types of coverage that we offer. There's coverage against generally mechanical failure. So this is more of what you would consider to be an extended warranty, right? So the manufacturer typically will cover a device for the first year. And then beyond that, we would say we'll provide the same or even better coverage if the device breaks, if it just fails, right? And that is available pretty much across the board on everything we cover. Then there are some products where we cover what we call accidental damage. And that's generally going to be available for things that are portable, like your cell phone or your laptop. And colloquially, we call that drops and spills protection, right? You drop your phone, you spill your coffee on your laptop, something like that. And so that's the first distinction, right? Is you've got different types of coverages based on the different type of products. And then there's all sorts of parameters underneath that. There's how many years you cover a product for. We also have plans where you pay up front for 2 years. We also have monthly subscription programs. So there's lots of different flavors where we can dig into if you want. And then how the claim is resolved is back to what I talked about, the technology platform that we've built. That's really what it's all about. So we've built a pretty, I would say, intelligent engine that takes in all the information we have about the customer, their device, their problem, and crunches the numbers to figure out what the best resolution options are. But one of the things that we really pride ourselves on is giving people choice. A lot of other providers will they try to funnel you into a particular option. We'll try to say, hey, here's a recommended what we think you should do, but then there's 2 or 3 others if you prefer, if that's better for you. But those options at a high level are repair. If possible, we always like to repair as long as we can do it quickly. Because that's because customers would generally rather keep their device, right? They would rather fix what's broken. If I have a cell phone, I don't want to have to transfer my data to a new phone. And so, there we've really invested in being able to get their phone fixed the same day, right? And we provide solutions where you can get that taken care of. But there's also bigger device repairs where we have to come into your home and schedule an appointment. There's mail-in repair. And then there's replacement. If we can't repair or you don't want to repair the device, it doesn't make sense, we'll work with you to get a replacement, which is oftentimes a slight upgrade to what you had originally. Because you may have bought a TV 3 years ago, that same model may no longer be available in the market, but we'll work with you to say, hey, for the price that you paid for that, we can actually get you a better TV today, and we'll do that. And then ultimately, if none of that works out, we'll send you a check. We'll write you a check for what the item was originally worth.
Yeah. So there's been a lot of conversation in the insurtech circle about embedded insurance, which is that's what this is. You had mentioned earlier that at the time of the purchase, these options become available. You had also mentioned that for some products, like the warranty offer becomes available like after the purchase. Um, what's the decay in take up of the insurance between getting them when at the point of sale when they're actually buying it, and then having a bit of time drag on? Do you see a decay? Do you see a significant decay, which would be my expectation that capturing it at the point of sale is the most optimal upsell to offer the warranty service?
Yeah, you're 100% right. I mean, that really is the trick and the power of this, is being able to offer at the right time. And I think there's two things that we bring to the table there that are kind of special. First is the brand, right? The Allstate brand is such a huge motivator at that time, because it's oftentimes a kind of a split-second decision, right? If you're at a mass retailer like a Walmart and you're checking out, you're going to have an opportunity where that's offered and you got to make a decision. And one of the big ways that a customer will make that decision is if they see that this is from a product from Allstate, right? The Good Hands brand that has been around for nearly 100 years, that they know and love and trust. They know who they're going to get service from, and that will cause them to have that peace of mind versus somebody who isn't a branded provider. And frankly, there are no other branded providers in the market. That's one of the big differences. And the second thing is we really work, because we work with all the retailers for the most part in North America. We're able to really capture the best practices of how to make that offer, both from a sales training perspective, but even a technology perspective, right? So we worked, for example, with Walmart to implement a customer-facing prompt on the little pin pad reader, right, that you have when you're checking out. So we're not reliant on making sure that the person operating the register is offering the product. We make sure that offer is front and center so the customer can make their decision, with a little bit of information there. So that's just one example of the types of innovations that we've been able to bring to bear as we work with our retailers. But you're 100% right. Like once the customer is left, certainly we try sometimes to do post-purchase marketing, and you get a little bit of take up, but really it's in that moment where you've got their attention. So you have to make the most of that offer.
Yeah, I think it's one of those areas that a lot of non-insurance professionals, when they come in, they don't realize that insurance is all about relevancy. If you don't hit them at the right time, no one eagerly wants to buy insurance.
Yeah.
I always make the case. Unlike like concert tickets, no one's going to camp out to buy the next iPhone or get concert tickets.
Well, and we're not required either, right? Auto insurance and home insurance, you have to get in. So it's just a matter of who am I going to choose it from. This is truly a discretionary purchase.
Yeah. So in regards to the point of sale and how you engage with retailers, so can you talk a little bit about that engagement? So a retailer that might be listening to this that says, hey, this is an interesting thing that I could potentially bring in. What does an engagement with APP, Allstate Protection Plans, look like in terms of getting them, getting the product, your warranty product, to tag along at the point of sale with some of their products? What's that engagement look like, and how do you expect the interaction to go between retailer and APP?
Yeah, I mean, look, we try to make it as turnkey and simple as possible. So, we built a lot of technology to, make it really easy to integrate. If you think about at a high level, what it is between a retailer and us is that there needs to be a way for them to sell products and tell us what they've sold, right? So that we can then create those warranties in our system, and then we handle all the claims after that. And so that can be both a retail point of sale integration, and it can be online on their website. And so, we have a set of APIs, integration tools that have been created, which, pretty much any IT department can program into in a matter of days. It's pretty easy to do. Our business development teams will work to help you with pricing, because we've got obviously all the experience and the detail of how to optimally price against different price bands and different product categories, so that we can maximize attach rate. And the only work you really have to do is figure out how to set those SKUs up in your POS system and make sure that there's they fire, and that there's an ability to add them at that time of purchase. But again, we really, it's kind of a turnkey value added service, because we'll then provide you an ongoing account management. We've got a field sales team that's nationwide that can help train your sales force if you need that in terms of how to sell the product. We really try to think of everything and take a very consultative approach to it.
Yeah. Yeah. So when it comes to what's a typical cycle between if a eager retailer wants to add this to the time it takes to actually have this either on their online system or POS system in one of their retail shops, what would be like a typical duration cycle to get up and running?
Sure. So I'll expand on that a little bit, because I think the answer depends a lot on the retailer. So, if I'm a Walmart or a Home Depot, I'm going to tend to have fairly complex systems, and I'm going to want you to integrate into me, right? Like I'm not going to rewrite the way my files work or the way my POS system works. And I'm going to have online, I'm going to have multiple POS systems, and I'm going to have lots of different SKU systems, all that stuff. So those tend to be more complex because they're by nature custom, right? And so they may take 4 to 6 months, for example. But we recently launched this service called Allstate Protection Plans Express, which I wanted to mention in this context, because even though we've grown by standing up these mega retailer programs that are somewhat complex, what we sort of realized is, because so much of our growth has been focused on that there are a lot of smaller retailers or manufacturers who sell direct that maybe didn't feel like we were an appropriate service for them, right? Because we were only working with the big guys. And that's actually not true. Our doors have always been open to people of all sizes, but we realized that we hadn't really rolled out the red carpet and made it simple. And so what APP Express is basically a streamlined version of our integration technology on the back of this thing we call the Falcon API, which is really just a simple standard set of integration calls that, as I said, can be set up in a matter of days. Simplified pricing, simplified contracting, straightforward version of our service. You get the benefit of the Allstate brand, the benefit of our technology platform, and really something like this could be up and running. If people are focused on it, can be up and running in a week. No problem. So it really runs the gamut. If you're a small retailer and you're ready to work in this kind of standardized fashion, it's actually really simple.
Yeah, and I would think that'd be very, very valuable in this day and age where it's so easy for a retailer to get up and running, right? So, I would also guess that from a benefit standpoint, there's a higher probability of retention. So for smaller retailers, like this is an interesting value add that can be implemented fairly quickly, but the retention of that customer, like it's something that could differentiate one retailer from another. Can you talk about that aspect and what you've seen with the customers that you've worked with in terms of how that changes the dynamic of the potential retention of that customer?
Yeah, I think that's really what it's all about these days. Retailers are competing really aggressively with each other for their customers, right? And so once you've won that battle and brought a customer in, you want to do everything you can to elongate that relationship with the customer. And protection plans is a great way of doing that, right? It's a way to basically say, look, my relationship with you is going to continue beyond this transactional point where you purchase something from me, right? And so that's super important. But at the same time, who am I going to hand my customer over to? Because if I'm creating that ongoing contract, if you will, with my customer, I've got to know, and no pun intended, that that customer is in good hands, right? And so it is a huge deal of saying, like, do I, from a customer standpoint, I want them to know because it's a branded product they can trust versus a no name that I don't know who's going to get the service and if they're going to stand behind it. But then for me, I can't risk that long-term customer relationship. And when you think about the customers that we've taken over, the bigger retailers like a Target, for example, or a Walmart, or almost anybody who we've gone into over the last 5-10 years as we've kind of dominated this market, one of their biggest issues is customer complaints and escalations. And we see that over and over again, that a poorly run, a poorly administered program that doesn't have great service comes back to haunt the retailer, because the customers, they're going to come back to the retailer. They're going to come back and say, hey, you sold me this product. The service stinks. Do something about it for me. And that noise, that gets up to the boardroom level, it gets up to the CEO level, and it's not good. Retailers hate it, right? And they see the damage to the relationships they have with the customers. So for us, a big part of what we have invested in with our tech platform is the ability to manage the service from end to end, right? So unlike a traditional model where you get a claim as a provider, and then you basically farm it out to service. You throw it over the wall and say, hey, customer service provider, you guys talk, get everything taken care of, right? We actually do it differently. We think about it as a managed service where, because of our tech platform, we are integrated with all the providers who provide service for us. And we can see any moment in time where a claim is and where that device is. And therefore, we know if it's going to go off the rails, right? And we have reports and tripwires that basically catch things before they become issues, and a dedicated team that says, how can I manually, proactively intervene now, hopefully to head the problem off at the pass. But if we can't do that, at least communicate to the customer, tell them what's going on, and talk to them about how we can make it better. Because that's the worst part, is customers just feel like they're in the dark, right? My warranty provider doesn't know where my device is. The device repair person won't answer my calls. And I just feel like this stinks. And so for us, that's been how we manage that very differently. So every retailer we take over, their escalation rates plummet, right? To, tenths of a percent of claims result in some kind of customer escalation that's actually related to service. So it's a huge piece of it.
You kill two problems by doing that. You not only resolve that, but and any retailer knows this, that if disgruntled customers treated in a particular way where they get their problem resolved, they almost feel like indebted. Like there's the opportunity to flip the script and turn a disgruntlement into fuel for retention.
Yeah, and it's really interesting. I mean, we internally have always had this kind of curve we used to draw on the whiteboard. It was called sort of a happiness curve from a customer perspective. And it's like the moment that something goes wrong, your happiness dips, right? You're like, oh, my phone's broken, my laptop's broken. And then your expectation is like, okay, I'm going to go after the warranty and see if it works. And your happiness tends to go down, right? Because you're anticipating the rigmarole you're going to have to go through. But then when you come into contact with an Allstate protection plan, claim resolution, it delights you, right? And our internal motto is that we turn bad to good. And so what's interesting is you get this boomerang effect where from the depths of negative expectations, you're like, wow, that was really easy and really great. And all of a sudden your happiness goes above where it was before your device even broke, right? And it's that capital, if you will, that has been created. And certainly for us, as a branded provider, that creates trust in us, so that when you see our product in other venues, you know that it's good. But you're absolutely right. It also says, hey, my retailer sold me this. They sold me a good product that took care of me. And so, I'm going to be inclined to go back to that retailer.
Yeah. I almost took for granted, before having this call, I was thinking, I hadn't pieced together that part of it, but that could be like a very interesting element to a retailer's strategy for their business model. Is, it'd be one thing to just offer it, to say, I'm going to offer this because I can differentiate myself. But if you do that and you don't do it right, you cause more harm than good. But if you do it and you do it exceedingly well, you can solve a whole other set of problems beyond just like what we're talking about that this product was meant to solve.
That's right. I mean, traditionally, before we came along, retailers offered extended warranties and protection plans because they made money on them, right? That was basically the motivation, is that they're relatively high margin products compared to, relatively low margin electronics in a retail environment. And the problem with that is that if making money is the sole motivator, it creates all these negative incentives, right? The warranty providers are incented to make money, and the easiest way to make money traditionally is by making it very difficult to file a claim, right? If frequency goes down, my costs go way down, right? And if I do have to accept a claim, then I provide slow service because it's cheaper and it's not going to come back to haunt me. So that helps me increase my margins so I can increase my retailers' margins. But then the problem is that to sell that product, in the retail store, it's like selling a used car, right? You're using high pressure sales because you want the margin, but the product doesn't stand on its own. And so by flipping it on its head and saying, we are a branded, transparent, researchable, customer-centric service that has used technology to reduce our costs, as opposed to bad service to reduce our costs. You can sell on features, right? You can say this is a good product that has guaranteed service. Things like our Home Depot program that we launched in February, we guarantee nationwide that if you need a repair appointment for your appliance, you'll get it within 3 days. And in the top 100 metros, we'll guarantee it within 2 days. Nobody else in the industry has ever done that, and nor is able to do it because they haven't built the technology and the service innovation around that technology to figure out how to make that happen.
Yeah. Allstate is one of the preeminent brands in insurance and one of the biggest writers of auto and homeowners. There seems to be, it could be, I don't know if this is in your roadmap or whatever, but this seems like a natural fit as well for specifically their homeowners product, where some of this stuff lands anyways. We're talking furniture, appliances, and generally, malfunctions are not covered in those things, and right. that seems like a natural fit. Am I wrong?
You are not wrong. I mean, again, if you go back to the original rationale for why Allstate approached SquareTrade and made the acquisition, it was the early days of what, if you follow Allstate in our earnings releases, we talk about our circle of protection strategy, right? So one of our big strategies is to provide not just the best lowest cost home and auto service, but to provide all of the protection needs that our customers have today, whether it's device protection or identity protection, roadside, all of these services, right? So that we can create a sort of single one-stop shop and one-stop hub for all of your protection needs managed under one roof by a brand you trust and a service you trust. So like you basically just stated our strategy, it is 100% what it is. And in fact, Allstate Protection Plans has rolled out a product that we call a whole home protection product, right? Which basically is a monthly subscription where all of the electronics devices in your house are protected, right? And in a blanket coverage. And so, yeah, I mean, I think whether it's co-marketed, whether it's bundled with special pricing, whether it's a rider you put on home insurance, I mean, there's a variety of different ways we can bring it to market. Phone insurance as well is very relevant add-on to a lot of to a lot of our customers in different venues. So I would say that the specific tactics of how we roll this into the circle of protection, we're still working on and testing and learning, but that is the strategy because there's tons of synergy across these products.
Yeah, and relevancy too, right? Like similar to the point of sale at the retail, when they're making that decision or having the annual review on their homeowner's policy, like that's the time. Like, would you like to add this endorsement?
Did you know? Yeah. Did you know you could do this? And yeah.
It just seems like a natural fit, and you're starting to see, some homeowner companies in the insurtech area add other types of warranties or not warranty or maintenance level stuff under a similar vein, right? Where it's individuals and homeowners have probably a broader range of exposure, like the exposure set that they're getting exposed to, the hazards and the exposures are increasing. Like one of the ramifications of a digital environment is just a constant in-stream of new products that do new things. And so there's a consistent rollover of this stuff. And I feel as though individually, the digital environment was supposed to make our lives easier. It's almost made it more complex because our exposures are bigger, broader, but also evolving faster. 10 years from now, our exposures will probably be significantly different than what they are today. And today is a departure from what our exposures were 20, 30 years ago.
Yeah, I mean, another flavor of that dynamic that you're describing is just even how do you define device protection more broadly? And this is something we've been really thinking about a lot. And again, I think something that makes it different working with Allstate than with somebody who is a monoline device protection provider is we can expand that model. So as you mentioned, it can be overwhelming, all the new tech. these days. Getting your smart TV to talk to your smart home hub, to talk to your doorbell, to talk, all that stuff. It's hard. And so one of the things we've rolled out over the last few years very successfully is premium tech support, oftentimes bundled along with our protection plan. So not only do you get protection if your device breaks, but if you just can't get it to work, you can give us a call, right? And we'll take care of that for you. So we're constantly tracking all the newness, right, coming in, only because we need to be able to understand how to repair and fix these devices for people, but also because we've realized that their problems aren't just when the device goes wrong, they're when the device breaks, right?
Yeah, it's so interesting, Karl. I was wondering how Allstate would manage the purchase when they did it, and so now I get it. It makes complete sense. And as we've seen, I see the roadmap too, like the ability to leverage Allstate's brand and assets, the resources they bring to the table. It is a significant differentiator compared to probably your competitors, but it's also puts you on a different roadmap, I think, than what anyone can do. I haven't heard of anything like this.
Yeah, I mean, I agree. I mean, I think that's been why you've seen the curve kind of accelerate since that acquisition, is that SquareTrade did a lot of great stuff, building great technology on its own, but the SquareTrade brand was never going to be a brand with the equity of Allstate, right? We were going to be transparent and researchable, but people didn't, we would never have the capital to invest to build a brand that you can do over 90 years, right? And then, as you say, just access to the scale, the credibility. We talked about the fraud tools, even just owning our own insurance. A lot of other device protection providers actually aren't insurers; they're administrators, and so they've got to go rent paper from an insurer to underwrite. That's all fully vertically integrated with us now, and owning our own insurance not only reduces our cost structure, but it also gives us incredible flexibility from a product creation perspective. Right? We can move much faster.
Yeah. So Karl, this is the part of the podcast where I make a CEO look like a human being. Over your right shoulder, you have a little critter there.
I do. Yes, that's my dog Albie. He is my constant companion. I don't know what he's going to do when I go back to the office at some point, but he's. I've just been sitting here praying that he doesn't start barking during this interview. But it's always nice to have him in the background here, keeping me company.
Well, it's very fitting in this digital environment where we use technology to be a warranty service that Albie is there guarding the door. He's your warranty and security service. So,
yes.
Karl Wiley, CEO of Allstate Protection Plans. Thanks for coming on and educating us on a different line of insurance and how it works. I'm always pleased to have someone like you come on and educate me.
Thanks so much for the opportunity. I love telling this story, and I hope your listeners love it, and happy to come back anytime.
Okay, well, I will put Karl's and the APP information on the show notes. So if you're driving, you don't have to pull over or get distracted with your cell phone. It's on the show notes. So everything will be on there. Karl, thanks again.
Thank you. Have a great day.
I have a dream that one day this nation will rise up and live out the true meaning of its creed. We hold these